Okay, let's talk about an important topic that I think often gets overlooked, and that's equity drawdown. Now, when new traders enter the market, many, I don't think, even know what drawdown is. They're usually more focused on how much money they can make rather than the risks involved in order to achieve those profits. They're not really concerned about how much they can lose, especially not from the start. But as you know, every trader experiences losses. It's part of the game. It's what we do. So we need to understand our acceptable level of risk and drawdown. Trading is, as you know, more about psychology than anything else. We need to feel comfortable with the level of risk and drawdown that we will face. We don't want to be uncontrolled. Instead, it should be a level where you're happy with and accept it. When you encounter drawdown and consecutive losses, you don't want to start feeling panicky and taking on excessive risk to chase those losing trades. You have to accept them. Accept and expect and respect drawdown. The best way to handle, I think, drawdown is to have your strategy thoroughly backtested so you know everything about the strategy. The more data you have in your backtesting, the better. You might even want to run it through some forward unseen data, like using a Monte Carlo simulation. That is for another topic, but a very useful method to evaluate a strategy going forward. Gets you your worst case scenario on what your drawdown could be if things get really bad. Maybe I'll do a video on that one at some point. Let me know in the comments if you want me to do that. So let's define exactly what drawdown is. It's basically the percentage difference from an equity high to a subsequent equity low. So for example, if you start with $1,000 and grow your account to say $1,200, that's a 20% return. Now, if then you experience a losing period and your account then drops to say 1,100, you're still up 10% from your starting balance, but you've had an 8% drawdown. You need to feel comfortable with that if it's the strategy you want to continue with. This can happen again and again. If your account goes up to say $1,500 and then drops back to $1,200, that's a 20% drawdown, even though you're still in profit. You have to accept these drawdowns. And as I said, expect them as well. Now let's look into balance and equity, something you might see on your trading platforms. Basically, balance shows the return on investment on the closed out trades. But the equity, you'll see there on your terminal, equity basically is the open positions as well. In this example, our equity line shows what happens to your open positions. You must accept these drawdowns if you aim for high returns on investment. You often see strategies, I think, with really high returns, but with significant drawdown. For instance, you might see a strategy that has a 300% return, but then you look a little deeper and you see that it's got potential for 50% drawdown. Are you comfortable risking 50% of your account for a 300% return? Ultimately, have to make those decisions yourself, not always thinking about the profit, thinking about the risk that it takes to achieve that profit. It's crucial to consider drawdown in relation to the percentage gains. Recovery from a drawdown isn't as simple and straightforward as you may think. If you have a loss of say 5%, you need to gain 5.3% just to break even. If you lose say 20% of the account, you need a 25% gain to break even. And think about this, if your account goes to 50% drawdown, you need 100% gain just to recover to get back to where you started. Excessive drawdowns can make recovery very difficult and can lead to blowing up the account. Let's jump onto the screens now and I'll show you some examples. Okay, so what I'm doing here, I'm going to the popular FX book site, My FX Book. I'm not affiliated in any way to My FX Book, but it's a site I sometimes look at. It's a site where basically traders upload their strategies for you to evaluate and potentially follow should you wish to. So that's a free shout out from my FX book there. You see here, this strategy looks very good, doesn't it? Nice positive growth curve, but you need to look a little bit deeper. Here you see the growth is 78%. This, I think, it includes deposits, but a growth of 78%. And the drawdown maximum drawdown has been 46.5%. Are you going to stick with this strategy when you're seeing your account almost halved in value? You've got to be pretty thick-skinned for that. You see the yellow line deviating from the red growth line. This is the equity line, and this shows you the open trades. Again, you've got to be pretty thick-skinned to be sticking with something like this. And here's another one. You see again, nice looking growth curve. Looks pretty decent, doesn't it? It's got a gain of 84% on the strategy, and the drawdown on this one is 51%. Go to the drawdown, you can see exactly how it's all performed. Sometimes you're seeing a 30% drawdown. Again, you have to evaluate that. Are you going to feel comfortable trading a strategy, seeing the account decrease by 30%? So many people ask me, what should they do when they face significant drawdown? Well, the first step is to avoid getting into uncomfortable drawdowns in the first place. Use proper risk management, reduce the risk size, and always have stops in place. If you're risking 0.25 or 0.5% on the account, you shouldn't really be getting too big a drawdown. If you're considering a career as a prop trader, passing one of their assessments, it often involves managing drawdown as well. You have daily drawdown, you have overall drawdown. You need to be aware of that. For example, we have a daily drawdown currently at 4%. You shouldn't be losing 4% in a trading day. Now, I created a video talking more in detail the difference between absolute drawdown and relative drawdown, because there is a difference, and I'll leave a link here on the screen and you can watch it later. Drawdown is a key component when evaluating a trading platform and indeed strategies. It's essential you know what your maximum drawdown could be, and then you have to feel comfortable with it to pursue that strategy. Look, I hope you found this useful. Now you know what drawdown is and how to avoid those excessive drawdowns. Leave me a comment, give me a thumbs up, or indeed a thumbs down if you feel that way inclined. Leave your feedback, it really does help. Anything you want me to cover in these education videos, please do let me know, and I'll see if I can get a video done for you. Don't forget, of course, to subscribe to the channel if you don't already do so, and hit that bell notification. You'll be notified of all the updates and the live streams that I do on a regular basis throughout the trading week. And don't forget, we are a prop firm. If you want to head over to the citytraders.com website, you can see all our assessments and the fees associated with it and all the other bells and whistles we have to offer there as well. And of course, if you're inclined, you can come and join us in our Discord server as well. I'll leave a link here in the description. Okay, till the next video. See you soon.